Greetings, I'm Iris, and we're back with another edition of RONSCO Weekly. Our aim is to provide you with the most recent Chinese steel prices and market trends every week. If you are new to our channel, please consider subscribing and liking our content to stay up to date with all future updates. During the current week, the steel market in China experienced price fluctuations that went down. However, there were some encouraging signs on the macroeconomic front. To begin with, the data for June that was recently published indicated a higher than anticipated figure for total new social financing and new yuan loans, pointing towards a favorable monetary policy that is assisting in the revival of the economy. Additionally, the inflation rate in the US for June witnessed a deceleration, registering at 3%, which surpassed the market expectations. It is improbable that the Fed will raise interest rate any further in July, following a previous hike of 25 basis points. As a result, the US dollar has hit a new low since April, and the Chinese yuan has gained over 400 basis points in a single day, thereby elevating market sentiment. Nevertheless, upon analyzing the supply and demand data, it appears that there are still factors that are constraining steel prices from rising. During this week, the visible consumption of steel in China persists in declining. Additionally, the overall inventories of steel rose by 180,000 tons, whereas the production of steel fell by merely 40,000 tons. As we anticipate the forthcoming week, we foresee that the market will continue to display a feeble and unpredictable pattern. Among the key sectors that utilize steel, only a handful of industries, such as home appliances, are witnessing seasonal surges in demand. Nevertheless, the real estate market continues to be pessimistic, displaying no indications of progress in investment and sales. Similarly, the growth in infrastructural investment is also sluggish. As a result, these two primary sources of support for steel demand are contributing to the continued frail performance in the steel market. Furthermore, the relaxed monetary policy in China and the Fed's decision to conclude its interest rate hikes have already manifested in the market. Unless there are more significant affirmative policies, macroeconomic factors are unlikely to result in a noteworthy recovery in steel prices. What are your predictions for the Chinese steel market? If you find this video informative, please consider subscribing to our channel and liking our content by clicking on the subscribe and like buttons. We will be back next week with more updates. See you next week. Bye bye.